Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I'm excited today to be here with two former NCUA colleagues, John McKechnie and Jeff Bacino. Guys, how you doing today?
Very well.
Good, Mark.
Glad to hear. It's the end of summer. It's the end of the NFL preseason season almost. NCUA government takes August off, but it doesn't seem like it. There's a lot going on in government, a lot going on in the land of credit unions. I'm excited to catch up with you guys. It's been a couple months since we've done this. Give me one of you go first. Let's start with Jeff. For our listeners who may not, or watchers who may not have seen you on the podcast, give a little bit of your background in credit unions, etc., and then we'll be off and running.
Okay, let's see. Been in credit unions way too long. Since 1985. Worked at Congressional Associates. Worked at CUNA. Was appointed by Bill Clinton to the NCUA Board. Was appointed by George W. Bush to the Federal Housing Finance Board. Currently in my own company, succinctly called Bacino and Associates, and we manage 3 trade associations and do a handful of other client work.
Very good, very good. And John,
I came to the credit union world shortly after Jeff did. Matter of fact, he and I had lunch my first day on the job back in '87. I left Capitol Hill, came to CUNA, thought I'd stay for a year or two, but I really liked the Hill. I was enjoying myself. But 18 and a half years later, I left CUNA and accepted an appointment with President Bush. Joanne Johnson was chairman at the time, and she named me the head of Congressional Public Affairs, which I enjoyed immensely, especially during the meltdown of the mortgage market, which was the most exhilarating thing to this day I've ever been involved in professionally, and that was a great experience. And then in 2011, I left NCUA and decided to try my hand at the consulting world, and that's where we are.
and here we are, all three of
I
us.
will get a real job one of these days, but
Yeah,
not anytime soon.
Let's hope not. Let's hope not. So, guys, I was a minute or two late to start the recording because I had a quick call I had to take with a client. And at the end of the call, we had a short conversation about the NCUA board. And they said to me, depending on how this plays out, does Trump appoint 1, 2, or 3 board members? And my answer was, I don't know. I'll ask John McKechnie and Jeff Bacino when I start recording a podcast here in a couple minutes. So let's start with the NCUA board. Trump fired Otska, Trump fired Harper. They're still in their legal battle, in the middle of their legal battle. They came back for one board meeting, which interestingly had 3 briefings, so they didn't act on anything, which was probably good. And it was good that it wasn't a rule that was on the table that led to that, because we're in this crazy zombie limbo land. But with that, thoughts on where we're at today as it relates to the board and where we might be September, October, November, December.
Child, I got to give background, so
We should take that.
all right, I'll take this one. I recently saw somebody refer to the situation at NCUA as chaotic. Oh, wait, that'd be you, Mark.
Oh, was that me?
That was you. In my newsletter that I send out to a client list, I talked about the yo-yo situation. And basically, you're looking at the fact that Todd, I think it was April 16th, the Trump administration fired Todd and Tanya. Then on July 23rd, they were reinstated, as you said, Mark, just in time for that July 24th board meeting. And lo and behold, another court found on the 25th, the very next day, that they got to go. Right now, we're stuck in limbo. To answer your question, I think that the administration is probably going to have to wait for a decision on this Humphreys executor case. I think we talked about it last time. It's a Supreme Court case that kind of handles all these things. And there's indication that this court might be willing to overturn it. And if it does, then Trump would have the ability to fire pretty much whomever he wanted. And I think what the administration may look to do is to name somebody to replace Chairman Hoffman. His term expired a couple weeks ago, Sunday, August 2nd, and keep going from there. I think there is real danger if they try to appoint 3 members and a court later found that Todd and Tanya were illegally bound. Now all of a sudden you got 5 constituted board members. Maybe we can expand the board the way NASCA has always wanted, just by legislative.
The lawsuit, right? Yeah.
Yeah. So anyways, that's my thought. I think right now you may look for one person to take Kyle's spot, and then everything stays on hold. And I guess that you would consider that chaotic.
I have enjoyed not developing strong opinions about this because it is so unpredictable. And it's, in one sense, it's interesting to watch. I generally don't like drama at regulatory agencies. Jeff recounted the situation well. You have two vacant seats because those two board members were removed and it's legally contentious. You've got Chairman Houtman, who is serving in a holdover capacity. His term expired August 2nd, as you said. I suspect things are going to stay in place until the Supreme Court decides the Humphreys executor case, which is really not just going to deal with NCUA, obviously. It's going to deal with the larger issue of how much authority any president has in firing executive branch appointees. And even if those appointees are confirmed by the Senate, some in the Trump administration argue the president still should run the executive branch. Others say no, the Senate confirmed these people legally. The law says they stay. I don't know what's going to happen. I do know the Supreme Court's coming back to town in October, and hopefully we'll get some clarity. I want clarity and I want stability. I'm boring on this stuff, this particular issue, because I don't like a lot of high wire acts at a regulator. I think regulators need to be very staid and stable. And right now we're not in that situation. Although I will say, based, Mark, on talking to some of when I first encountered you were a regional director, and I've talked to some people at the regions and at the central office, and it does sound like the basic blocking and tackling of NCUA is still going on pretty well. It's not, these exam processes are continuing. The agency's keeping a good eye on the ball in terms of safety and soundness. So it's not an ideal situation on Duke Street, but at least the agency still functions.
It still functions, blocking and tackling. I think with the pick a number 18 to 22 to 25% of staff who took the buy, and a lot that is impacting. So it's Jeff's Chicago Bears when a cornerback goes down and then the other guy they drafted doesn't turn out to be as good as you thought, and you end up having the undrafted free agent starting. You got some people playing roles at NCUA, but they're going to rise to the occasion. They do. They learn how to play. They played cornerback, and some undrafted free agents end up in the Hall of Fame and end up making all pro. There's opportunities that this is creating. They are still doing the blocking and tackling, and because of the hiring freeze, people are doing some jobs on the go. But that, I guess that's a testament to all the high quality people that are there, that even though I had a guy who worked for me when I was in the Albany office as a regional director, Mike Sadowski, insurance director, he'd walk out the front door and say to the secretary, "You're in charge. And don't worry about it. It basically runs itself." There are systems in place, right? There's delegations. The agency knows how to do what it has to do to keep things safe and sound.
Do you think now we've got under 1,000 employees there for the first time in forever?
Wow.
It's 975 now. Is that going to go much lower, do you think?
I think it will because of the freeze. I also heard through the grapevine, so the freeze is on. Whenever Trump says you can start hiring again, you have to then get the announcements out. To get the announcements out, you have to go to usajobs.gov is going to have everybody coming to them at one time. One of the things that concerns me at NCUA is that I heard through the grapevine that all of the human resource executives have taken the buyout, and that all of the supervisors in human resources have taken the buyout. Just imagine the freeze comes off, pick January, right? Okay, you can promote people. You can promote people in HR into those upper level positions. You can start rating other agencies to fill your executive positions. It's going to be very herky and jerky to get the announcements out, to get the people in to get interviewed. And then the other side of it is, who wants to go work for the federal government right now with all these challenges, right? Yeah, I guess from the perspective of unemployment going up, there's more people who might want to go work for NCUA, but it's not the shining star that it might have been for some people who would consider government work. So I believe they'll continue to bottom out a little bit, and I believe there'll be people who will. So I'm getting on a soapbox now. Some of the people that took the 20, let's say it's 22% that go, some of those left because they were like, I don't know who my boss is going to be. I don't know who my teammates are going to be. I'm eligible to go if I don't take the money now. But one thing I do know is my job's going to be harder, right? So was it 3, 4, 5% of the people that left because it's, I don't want to put up with that challenge. That creates other issues that I think is going to have them stuck in the mud. But again, it goes back to everybody there cares deeply about credit unions, about the industry, and about doing what's right, and they'll get through it. But it's going to be a couple, 2 or 3 years.
This I want to hear.
What's that?
This I want to hear. A couple of what?
Couple
years? Decades?
I had a dangling participle there. I was trying to figure out where I was going with it. It's going to be difficult. I just did a podcast with my team about credit unions communicating well with NCUA is even more important now than it ever was, because NCUA is in chaos. Like you said, Jeff, it's a challenge for those that are left. There's a lot of dust in the air. Who's the board? Is it Todd and Tanya and Kyle? Or is it none of them? And then who's leaving? You and I have all heard who we think's leaving from NCUA at executive levels, but they got a lot of positions to fill. They got a lot of good people, and they're losing a lot of corporate knowledge. They're going to have a lot of people step up, but it's a challenge. And it's not just NCUA. CFPB was like goblet was thrown on the floor. NCUA is better position than what's had gone on there.
CFPB was a little like that Red Wedding episode, Game of Thrones. He dies in the end.
That's good. Yeah.
But I think the interesting thing is going to be, and you touched on it, is who's the board going to be? Because all three of us know, and anyone who's ever worked there knows, and those of us who are lucky enough to serve at the board level understand, that relationship between those three people can dictate what the agency works like. If they can work well together, things move smoothly. If you have things like Norm DeMore and Yolanda Wheat fighting and arguing about everything, it makes it a little more difficult, not only for the staff, but also then therefore for credit unions. So it's going to be interesting to see what they do. And I do agree with you. We've had a lot of brain drain leave. You got people who are moving up. And in the end, I know they'll do well. The problem I see sometimes is some of the things that you can't do with a board. Allegedly, you can't do a field membership expansion. You can't do a new charter application. A couple of these things that, yes, the blocking and tackling is getting done, which is great. The problem is there's no flea flicker play. There's no deep bomb to the wide receiver.
There have been a couple conservatorships, and which also, in a way, they're never good news, but at least, again, that shows that some of the functions are going on.
Yeah. I'm not on that, though. So they're saying a conservatorship is essential because the only things they can do are what's essential under their delegation and all that. So, yeah, the fact that they conserved shows that they believe a board of one definitely can take action. But will they take action on a budget? Will they just use the old budget? Will they have a budget briefing or hearing or whatever you want to call it? Are they required to have a budget hearing or briefing if they don't do a budget?
I'm more focused on the interest rate ceiling next year. If you want to get down to the specific issues, that's something that's critical. And I'm not sure, but I don't know with the answer whether a single member board can enact that or can act on that or not. I think if I'm going to go on a limb, you want a freewheeling discussion, I'll make a prediction.
Yeah.
I think we're going to have 3 board members by first quarter of next year. I didn't say 3 new board members. I just said we're going to have 3 board members.
Jeff, by March, what's your take?
Well, John's prediction is like saying that the Ravens are going to win a game this year. They're that good. They're going to win a game. So I think it's pretty safe to say we're going to have 3. Again, I just have a sneaking suspicion. And again, I'm not a lawyer. I don't play one on TV. But, everything I'm reading about this Humphreys executor case on the Supreme Court level tells me they may strike it down. And if they strike it down, and that protection that every board member has always felt, once you were confirmed to a 6-year term or a 4-year term, you knew you were there pretty much short of treason or malfeasance, all of a sudden goes away. And all of a sudden, the president of the country, no matter who he or she is, can determine what the board is. And this has a potential to have a huge whipsaw effect. Obviously, a Democrat wins at 2028. On January 20th, 2029, wants to stop, I don't know, let's say President Newsom or President John Stewart from saying, you know what, every Republican, you might as well give me your letter because I'm going to fire you next week anyways. And we throw in a bunch of Democrats. And again, the die will have been cast by, as I said, if the Supreme Court does do away with that Humphreys executor case, the die's cast. Now all of a sudden, who wants to be a board member? It used to be pretty much an honor. Now it's an honor as long as your person is still in the White House. Once he or she leaves, you're toast. And I agree. I agree with both of you. There's going to be 3. My prediction, though, I'll get a little more sexy here. I think it's going to be 3 new board members. We're going to have 3 different board members by the end of the year. And if not, there's going to be 2 new board members and Tanya.
Yeah. And I had predicted on a previous podcast, so I'll stick with that there's an 80% chance that neither Harper or Otska will be coming back. But you're differentiating between Harper and Otska, and I think I know why, but why don't you explain to the listener why you think perhaps Tanya will come back, Tanya Otska, board member Otska, I'll be more formal, versus board member Harper. Walk through that.
You're doing this intentionally because you want the cover page on the National Enquirer. Where I have been very upfront with this, and I felt that the Biden administration legal opinion that said that Todd Harper could, in essence, succeed himself was flawed. Okay. I've written about it. I've talked to Todd's old chief of staff about it. And again, I always like to preface it by saying this is not personal. I know Todd a long time. Okay. But it's a policy argument on my part. And frankly, I would have this same argument if it were you, Mark, or John, if it were my daughter, or it's a Navy. If it was any of those people, I would still be arguing the same thing because I think it's bad policy if we break that precedent and allow people to succeed themselves. Okay. It's just not in the act as far as I read it. And so once that happened, I felt that the Trump administration could have come in and said, you know what? We read this Biden administration legal opinion. Here's our legal opinion. You're not allowed to stay, so you'd have to leave. Now, that of course would have opened the avenue for Todd to sue. But from the White House's perspective, it might have been a little cleaner to do it that way. Right now, what they've done is they put both of them in a box together, which means the issue's muddied. So that's why my prediction would be, I think that Tanya comes back, 2 other new board members are appointed, and the White House moves on from there.
Great points. John, anything you want to add on that?
Yeah, I think Jeff covered it well.
Okay. I'm gonna one last topic on blocking and tackling, and the Bears aren't involved, Jeff. So that's good. Recently, NCUA has a National Supervision Policy Manual, which is a mostly public document that they update on the fly. And one of my guys, in doing research for something we were working on, noticed that they changed their requirement to have 120-day follow-up contacts on Code 4 credit unions. So that policy is a policy that's been in place since I started at NCUA in 1986. Essentially, the worse your camel code, the more time NCUA is supposed to spend with you so that you can resolve the challenges that that institution may cause for the insurance fund. And they've publicly made changes to their exam cycle so they could get their exams done on time before they lost 22% of their staff or whatever the number ultimately is going to be. And then I don't want to say they snuck this into the NSPM, but they snuck this into the NSPM, giving them some flexibilities to do less follow-up. And I know what they're doing. They're doing triage because they're going to use their business sense of blocking and tackling to decide where they're going. They're creating some flexibilities for themselves to go where a Code 4 that they really need to go do, as opposed to a Code 4 that's getting better. And that makes sense, but you can comment on this if you want or not, but because they've been forced into that because of the resource drain that they're having, and that can work. That's like running 3 marathons in a row. It works for a while, but the blocking and tackling is going to fail at some juncture if they can't start hiring, if they can't start filling vacancies. And that assumes that the economy stays like it is, because the economy could get worse. It could not get worse. But if it gets worse and they can't hire, the blocking and tackling is going to get challenged.
I think the industry right now, there's a natural antagonism between the regulated and the regulators. So I think that a lot of credit union people, I've been to three league events and a DCUC event in the last month. People are shedding a lot of tears about what you're saying, and I'm sure that doesn't surprise you. And I'm not infinitely more about the details of that manual than I do. I would say that I've heard explicit comments from credit union people about CFPB and how happy they are about what's happening there because they feel like that agency, which a real rogue, NCUA got called a rogue agency years ago by a judge. But I think CFPB was the embodiment of a rogue agency for much of the last decade, just in terms of the way they tried to go far and beyond any kind of reasonable definition of consumer protection and tried to become basically market dictators to the financial services world. So credit union people are happy, I think, that the way that bureau has been truncated, if not damaged. They're not sad about that at all. And if there's a change in administration, that's the pendulum just going to swing back. Let's not forget about that. But for right now, I think there's a general feeling that less is more.
I've said that to some of my clients. I think what I said about the camels, in the short term, individually, that's going to help. Someone who's ran into an issue that they're dealing with and they know how to deal with, instead of having NCUA asking them every 5 minutes, how do we deal with this? The good code 4s that had something happen that are going in the right direction, or code 3s, they're going to get a little bit of a reprieve in the short term. And I think that's good. And I understand why they'd be happy about that. If it's an elongated situation where they can't go to places they need to, that's where it theoretically can create a challenge to the insurance fund of some level. I'm not saying anything catastrophic, but that's where it gets to be a little bit more calculated. And on the CFPB, I agree with you on that. I thought they have been rogue. I listened to a fintech podcast recently where someone really intelligent was speaking, changed my thought on it a little bit, basically saying, if you don't lose sight of that pendulum, right? Because the states will fill in the blanks, the states will sue, the states will pursue it, there will be lawsuits, and when the pendulum swings, it'll swing with a vengeance. So fix your consumer compliance roof when it's not raining, because when it swings, it'll swing quick. Jeff?
Yeah, I want to be clear. I like the idea of having a strong, credible consumer protection entity. I just think that in some ways there was a little bit too much of a little too zealous of maybe of an anti-business, anti-free private sector ethos that was on display over there. And I'd just like to see a government agency that's a strong, credible government agency that protects consumers when bad stuff happens to them. How about that?
I like that.
And again, that would be the ideal. But as we've seen from this agency from the get-go, remember, it was Elizabeth Warren's baby. She was supposed to be the first head of CFPB. And this is before she was a senator, okay? And the Senate kind of sent signals that they would not approve her. She then ran for the Senate, won, but then they put in Richard Cordry, who was somebody that was very close to her. And it did swing on that upward pendulum. Trump wins the election. Mick Mulvaney is there for a couple of months, in addition to doing 3 other jobs, I think. He was Marco Rubio of that administration. And, I think I know he changed the name. I can't remember what it was.
It became it became the Bureau of Consumer Financial Protection, because that's what the statutes called it.
Okay.
I think that was a kind of an optics thing that Mulvaney was trying to say. You guys don't want to change a comma in this statute when we try to do it, but you guys changed the name unilaterally. So it was a bit of a sleight of hand, but it didn't really stick.
Anyways, though, he changed it. He stays there, and then Kathy Kreninger comes in, and she leaves when Biden comes in. Chopra comes over there. It starts to go back up the other way. Again, we talk about the pendulum swinging all the time. The reality is this would be an ideal situation, as John said, if the pendulum stopped in the middle. That's probably where it does the most good for the most people with the least amount of harm. In a way, you'd like it to be the Hippocratic Oath. First rule is cause no harm. And we're just not there. And again, the more that we get divided, the more that things are my side or your side, the less chance you ever have of getting back there. And again, with fewer and fewer moderates in this town, it begs the question that how do we ever get back to what we would like when to do winds up ticking off one side or the other?
No,
Do away with the internet. How about that?
Say that again. A little like the
Do away with the internet if you want to get more centrist and moderate thinking.
But then the 3 of us would have to be in the same place at the same time.
Good point. Good points on both counts. So let's pivot to another interesting topic, America's credit unions. So we've had the merger, and recently there were some changes at the top. of America's credit unions that let's chat about what's happened there and what it means for credit unions.
The new CEO is certainly has been a successful and tested player, especially on the advocacy side that I pay attention to. Scott Simpson was in Utah during some of the most pitched battles between us and the banking industry that I've ever seen back in the early 2000s. And then he became CEO of the Utah. He was a government affairs person. Then he became the CEO. And now he's been at the head of the three leagues, California, Utah, and Nevada. Like I said, you can't argue with success, and you can't argue that he has not been through a lot of battles and seen a lot of things. So I think there's a lot of reason to believe that he will be able to hit the ground running and move ACU into the future, whatever that future is.
Well, I think what John said was important in that he can hit the ground running. This is meant as no disrespect to Dan Micah or Jim Nussle, but they were both politicians. Okay, Micah was a moderate Democrat from Florida, Nussle, a fairly moderate Republican from Iowa. The problem is they didn't know credit unions. Okay, and I think that America's credit unions is at a point right now where it was crucial for them to take someone who understood the system, understood the history, and Scott does that. Scott can handle all three of those things. He's going to need to do in terms of the advocacy side, the business side, and then what I would call the personal side. There's a personal side of being the head of the biggest credit union trade group.
Sure, that's a great point. And I didn't realize, John, when you walk through him being involved in the challenges in Utah, which when I hear that, I'm thinking of the ABA suing on the field of memberships that were granted there that no doubt created some scar tissue that'll serve him well in all the things he has to do.
He's very experienced, very steady. I don't know him well, but every time I've seen him and interacted with him, I've found him to be a very, very solid, smart guy. He's got some opportunities. Now he's going to be at the helm in November 3rd, I believe, is his start date, and he'll have some business to attend to on his plate. I think even though I was talking earlier to a credit union group today, we all should be happy about winning the tax battle that was waged early this year. Problem is there could be, and I want to emphasize the word could, there could be another tax fight around the corner. Bankers never going to let that issue go, obviously, but it looks like Congress may attempt another budget reconciliation bill, and we have to be on our toes. I don't see a DEFCON 1 situation at the moment, but theoretically, Scott Simpson could come in the door where there's at least some degree of a challenge again to credit unions on the tax issue. And frankly, that'll be the case all the time because it's perpetual.
You can't rest on the laurels of winning the Super Bowl last year to keep the taxation at bay because it always comes up.
But he's got a good background to deal with whatever comes down the pike, I think.
Excellent. That's good. That's good to hear. So guys, what else is going on out there in the news? Here we are, end of August. NCUA is generally takes August off and then has monthly board meetings with only one board member. They've curtailed that a little bit, but they did announce that they're having a session where they're going to be asking about NCUA strategic plan coming up in September. Any comments on that or any other thoughts of things coming down the pike credit union wise?
Can I do this before we leave America's credit unions?
Yes, I'm sorry.
That's important. There's a couple of things in here. I think what John was saying was important. That most likely, I'm not going to say. John said could be a tax fight. I think there could be. Scott comes in the door understanding what it's like. But he also, I will say to their credit, DCUC, the Defense Council, has stepped up and made themselves the kind of next in line. I hate to say the new NAVQ, I don't want to bother upset anybody, but they're basically setting themselves up as another avenue for credit unions to help. I know they did a lot of work on the last tax bill that we worked on a couple of months ago. And Scott's going to have at least a little more ammunition. I don't know sometimes if anybody likes competition or likes somebody else out there, but the reality is I think DCUC did a good job. I also wonder, when Scott comes in, everybody likes to bring their own team. Are there any changes that he could make? Are there any changes that coming down the pike that some make sense and some look easy? I don't know if you guys have heard of anything, but I just think in the end, he's going to want kind of his players there. He's going to be kind of like Ben Johnson, the new head coach of the soon-to-be Central Division winning Chicago Bears. in that he wants his players. He does not want his players.
On the day this podcast is being recorded, there was a big personnel announcement out of ACU. Your chief advocacy officer, Carrie Hunt, announced he was departing. To your point, Jeff, this is another opportunity for Scott Simpson to put his imprint on the place. And that's a big job. That's the role I had when I was there. I can't believe saying this 20 years ago when I left, but it's an important role. And obviously advocacy remains at the pinnacle of what trade associations do. ACU, no exception.
It sure does. Yeah, that's going to be an important role for him to fill. And like you said, filling it with someone that it's an opportunity for him to build his team, for lack of a better term.
I think that, again, that's what happens. That's
life.
Three of us who go through it. You get a new NCUA board chairman. He or she wants their people there. It makes perfect sense. As a guy I worked with once said, why am I going to hire my enemies? I'm going to hire my friends. But now we can go on to the strategic planning webinar that is coming up.
Yes.
You did mention earlier about the budget briefing.
I did.
And I'm gonna take at least a little credit for this. The first ever budget forum was during my time on. Dennis Dollar came to me and said, I think this is a good idea. I agreed. And we had it on, I think we had it on November 1st. The first one was held on the day after Halloween. And I remember one credit union CEO from the Northwest came and complained that he was missing trick-or-treating people because he had to come in and testify. But, and those things were always interesting. Obviously, some people tend to say the same thing. Some groups tend to say the same things when they get the chance to. But I think it gave credit unions a chance to at least make their opinions known. And it'll be interesting to see what happens with this strategic planning webinar. Because again, I don't know if the format is going to be where people can ask questions, where people can.
Yeah, they say it's a town hall. But that's the way it was billed. And I like that, but I don't want to trespass on your time here, but I like that idea of it's a good signal for Chairman Houtman to send that he wants to sit there and have a dialogue and have a listening session. And that's important. I don't know what the substance of the session is going to be yet, but it's going to be an important one, I think. I hope people attend either virtually or in person.
Well, I agree with you. And Chairman Houtman has been very accessible. He'll go out, he'll talk to groups, he'll let people come in. So I agree. I think it's going to be good. I hope they will take the chance, opportunity to use it when they are given, because what was sometimes frustrating to me when I was on the board was people would complain, oh, we don't get to do anything. You don't listen to us, whatever. We give them a chance to talk and nobody would talk. To go back and say, it's hard for me to listen to you if you don't tell me what you think.
As you say that, I'm thinking of my time as executive director, and I won't name the board member, but he or she saw how little feedback. He or she thought he was going to get a lot of feedback on the budget and thought it was a little less robust than appropriate. So they looked at some other rules and said, let's give them opportunity to give us feedback here, because then at least we listen to them. We know that they won't participate to the level that they can. So to that point, Houtman is going out here saying, we want to hear what you have to say. And it's important to seize that opportunity. And if not, just listen and see what your peers have to say. Sign up, listen to it, but submit questions relative to the challenges that you're having, whether it's administrative burden, whether it's an exam issue, whether it's a field of membership or a reg flex thing that you've got an idea. Because the wisdom of good ideas come from the crowd, not necessarily from the regulators, that's for sure.
I love the saying that the way to have a lot of good ideas is to have a lot of ideas, right? You want to get a lot of ideas on the table. And our industry, not always talkative, but when it talks, a lot of times they have some real wisdom to offer. And I like the idea of this. Again, I talked about the format 30 seconds ago or a minute ago. I want to reiterate, I just think it's a very smart idea.
Yeah.
It was kind of interchange.
Agreed. Any more credit union topics before we predict our favorite NFL team's success coming up here in the season that's about to kick off?
No more credit union stuff. I got plenty of football.
Okay, this pivot. And John, your team's the best. At least it was last year. What's going to happen to the Ravens coming up?
I'm still mad at them from the last couple of playoff appearances.
You've been mad at them for years.
I'm still mad the Colts lost the Super Bowl to the Jets in 1969, so I'm not getting over much. But I suspect the Ravens will have a fun, exciting, successful regular season, and then something will happen to us in the playoffs. I need to be persuaded otherwise.
I'll take that. Jeff, the Bears,
John is one of my longtime friends. As he mentioned, we were hired about a week apart at CUNA. And the nice thing is he never changes. He doesn't, he will hold a grudge. He will remember things. And damn it, if you didn't produce, I'm going to remember. I'm excited about the Bears. For the first time ever, they went out and they got a coach that frankly matters. Historically, the McCaskies and the Hallises have been cheap to the point where Mike Ditka famously said they throw nickels around like manhole covers. And they finally went out and they paid for a coach and they paid for some free agent talent. Again, this is the best time of year for any football fan because your team's 0-0.
there's hope. We all have hope.
Everybody's undefeated right now, but I'm excited about it. And it's funny. There was a point last year where the Bears were 4-2 and they were leading the Commanders in the last couple seconds, about to go 5-2. And next thing, Hail Mary, or you can call it something different if you're a Bears fan like I am. And they go 4-3, they lose 10 in a row, and basically the bottom falls out. The one thing I do like about their new coach is when Matt Nagy was their coach and they had a downfall in a preseason game, he came and talked to the press conference, said, we're gonna look at it and we'll watch some film. And when Matt Eberflus was there last year, they had another bad outing, and he said, we lost, but we learned something from it. And there was a story I was reading about Johnson during the game the other day where they were leading the Bills 28-0. And he was overheard yelling at the defense, if you allow a point, you're walking back from Soldier Field bareback. He's the type of guy I pick up. So it holds out some hope for me to have a good season.
I had a couple supervisors early on at NCUA were kind of like that. And I'm a Viking fan. You guys didn't pick records. I'm going to say we'll go 9-8, 10-7. The J.J. McCarthy era is going to get off to a good start. Although I think not quite as good as a lot of the glass half full Viking fans believe. But I'm excited to potentially have a quarterback that can compete with both of yours.
I'll go 10-7 as well.
Very good. John?
11-6. And just January's our problem.
I'm just pleased that us three old guys are smart, are able to do the math of 17 versus 16. And remember, it's not 16, it's not 14, and it's not 12 anymore.
No, waited till you went first. I just copied you.
Yeah, there we go. That assumes I was right, though. As always, it's a pleasure catching up with you. We'll, as things break here, we might need to do some impromptu. Hey, we have a board. What does it mean? Et cetera, et cetera. So thanks, guys.
You know how to reach me. I take both your phone calls.
Thanks, guys.
Yeah, and listeners, I want to thank you for listening and watching. As always, Mark Treichel signing off with flying colors.